Good morning, everyone. Well, nice to have you here on, this last Tuesday of August. Hopefully you're having a nice summer. All right, let's go ahead and get rolling here this morning. Of course, just to always remember you have risk when trading, so don't trade with monies you can't afford to lose. Of course, Nadex does a great job of providing tools to limit risk, but always remember that you can lose money. So again, just be smart about it and trade with risk capital. All right, that's me. Been doing this for a long time. We're going to spend a few minutes here in just a moment looking at some charts of a couple different markets. So we'll get to that here in a second. First thing I like to do though every week and actually every day, just double check the upcoming known news. And a couple different services I like, forexfactory.com or myfxbook.com, both good sources. Hey, y'all out there this morning? Everybody hear me okay? All right, good deal. All right, so this is the Forex Factory. What I want to do when I'm on this page, just come to Forex Factory's calendar, and then over here under the filter, I like to get rid of these non-impactful events and hit apply filter, and then that pretty much narrows it down for me for the week. We had the G7 meetings here here this morning at 7 a.m. Eastern time. We have that. Actually, this is Pacific time. My bad. Sorry, I forgot I changed this. So 7 a.m. Pacific or 10 a.m. Eastern, we have the consumer confidence, and then we have these reports here throughout the rest of the week. The dollar CAD, we have dual reports on Friday. I don't imagine there's going to be a lot of trading the rest of the week simply because it's the week heading into the Labor Day weekend, although the volatility is there, obviously, because we're getting various tweets from the president and whatever else is hitting the news. So just be leery of the fact that the volume is, I think yesterday was the lowest volume day of the month for the S&P. So just remember that kind of spreads across all markets. All right, what we're going to do next here is we'll just pull up some charts and look at a couple different markets. We'll start out with the S&P. All right, so I'm going to pull up this 4-hour chart. So I have a workspace with a variety of different time frames. I do top-down analysis. And if you've joined me here before, then you've seen this in action. You've seen how I do this. How many of you have not seen this before? All right, well, I'll just go through it anyway here. So what I do is I mark off, I start out here with a 4-hour chart. Actually, technically specific, it's a 243-minute chart. And I'm marking off key support and resistance levels. And the red is resistance, the purple is kind of in the middle, green is support. And then this is an extended support level down here, the brownish color one. But you can see the market's kind of in between the two major zones, just kind of breaking up. But we had this big move here. Hold on just a second here. Sorry about that. We had this big move here yesterday, the rally off these lows. You can see how that held, put in this hammer candle and rallied significantly. Now up here against resistance of these moving averages, I have a 89 simple moving average and a 50 simple moving average right here. So it's holding price at the moment. Now above that, I have several other levels marked off here as far as a resistance goes through just drawing horizontal lines. This is my momentum indicator. Momentum is clearly shifted from the lows down here. Now is bullish. slightly bullish here at the moment. And we are in an up cycle as well on the 4-hour chart. So let's go down to the 81-minute chart, and you can see the push here as well now against the 200 period moving average here on the 81-minute chart acting as resistance. But just looking at these different time frames, we get a little more clarity here. And let's see here. So you can see right here, this is an area where this indicator that I have tends to top out. You can see here, here, even here. It doesn't mean it's the end of the move up. It just means it could be the end of this current cycle. So we might have to see the market pull back a bit, back into this zone before the next leg higher. So when that happens, then this is cycling as well. All right, down to the 27-minute chart. This gives us a little more clarity. Here is the 200 period moving average. In this time frame, the next level up is going to be this resistance area. It looks like it's about 2906.75 in this case. So we're looking at what is that, about nine handles or so, 8 handles, something like that. We have pretty good momentum here all across the board, but the only thing is for me is these cycles. With the market opening here at the bottom of the hour, we could see some sort of pullback, but we do have a lot of energy. I would be tempted to wait and see if we get a breakout to the upside, then a retrace back to this top of this purple zone and or these moving averages, and see if we get an opportunity. At that point, something like this, if I was going to trade this, have this come back, this would also cycle as well, and something like that. Look to get on board right over here if I was going to trade it. I pretty much sit on my hands this week, most years, just because of the lack of volume, the participants. So much money leaves the markets this time of the year. But if you are one that just has to trade as far as the S&P goes, that's what I'm looking for in this regard. We come down here to the 9-minute chart, and we have the breakout here of the range. As you can clearly see, momentum is fairly is still bullish, but kind of flat here as well. In fact, you can see through my momentum indicator, we are pretty much in a channel here, tight range. All right, so with that in mind, as far as up against these various resistance levels with the different time frames, we could possibly see some sort of pattern form here. And this is what I'm talking about here. As we come into this for a possible pullback. Now, I'm not necessarily would be willing to trade this at this point because we have a lot of momentum to the upside. But as I said, we could get some sort of retrace here. So we have a left shoulder and a head of a head and shoulder pattern. All right, so as far as this goes, again, I'm just looking for some sort of retrace. If I was to trade it, I would look to get on board to the upside because of this bullish momentum on all time frames here. That's telling me that even the 729-minute chart, which is over here in the lower section of the workspace, is bullish as well. It's just points. Just think of it in points, Andrew. Handles points for the S&P. All right. So there's the S&P. Any questions about the S&P here before I move on? All right, we'll just move on. Look at gold here. So Sunday night, gold had an explosive move. In fact, let's look at the daily chart to kind of get an idea here. Had this explosive move up, and let's see if I can zoom in a bit for you here. So it opened right here. So this high was 1546.10. That was August 13. The open here was 1545.40. So not quite opening at a new high, but then it ran and it reached 1565, and then put in yesterday at the close, put in the shooting star candle, which is typically a bearish candle. In other words, looking for that bearish reversal candle. It came right into my resistance zone that I have up here, which I established off the weekly chart, and that's where we sit. We sat, right there at that green line of support last night. Now today, the market's up a bit here, as you can see here. Last trading here at 1540 and change. 1540 and change. But I do want to point this out. So we have kind of this whole area here. I'm going to use that pivot right there as a possible left shoulder and a possible head area of a head and shoulder top pattern. So we've had quite a loss in momentum through this move here, as you can see. Same with the cycle, and now we're rotating back up a little bit. So slightly bullish momentum to the upside here at the moment. This wick is very likely to get filled. It may take a bit for that to happen, though. What I mean for that is for price to just come up into that area again. So we do have that resistance up there, so we could get rejected at that point, if the market comes back and retests that area. But that is the daily chart of gold. And let's move down here. We're going to jump down to the 4-hour, 243-minute chart. And you can see, so this, in fact, let me change the color of this. We're going to do that. So that's the weekly zone there. This is off this time frame here. And you can see we had this head and shoulder pattern. I don't remember if I used this market in last week's session here, but this is one that I obviously had marked. You can see it wasn't a big turnaround, but it was pretty good sized. 1526 right at that orange line, and then ran all the way down here to the 1503 level. It looks like 1504. So a pretty good move that could have had the possibility of relinquishing some profits had you traded that head and shoulder pattern. Now that said, let's look over here, because we did have a big loss in momentum from this peak downwards, and then momentum reversed itself, and we put in this low here on the cycles, and then everything started to rally from there. Excuse me. So we have this high in place now, and there was a little gap right here that's been filled in. It was filled in yesterday, and price is now consolidating in this lower level resistance area on a big loss in momentum. So one thing that I look at too is I want to see the momentum and the cycle energy moving the same way, because this is also kind of a momentum indicator, this lower indicator, and you can see that they are moving the opposite directions. All right, down here to the 27-minute chart. Look at that channel now. So we had the big run up Sunday night, the pullback that evening as well, and yesterday just a grind sideways. And that's a pretty tight range. That's about, just ballparking it here, it looks like about a $10 range over all that time. So that started, gosh, we could even use this candle, 1:48 a.m. Central on the 26th. So that's a pretty tight range. And even this last several hours right here, very, very tight range. All right, so we can come down to the 9-minute chart. And I look at this and I see that it looks very close to being right dead center of the range, right? We just kind of looked at that. I'm going to measure from the top of the range to the bottom of the range here, use the Fibonacci tool. And you can see the 50% retracement is right there. 50% of that is right there. So the market has hovered there between the 618 and the 382 level for quite some time. I'm not interested in this because of this grinding at this point. Would like to see the market break out in one direction or another. Will it do it this week? Well, we'll have to wait and see. At the moment, there's not a clear sign of that based on my methodology. So that's kind of the story with gold. Any questions on gold? And of a grinding market, again, you can see that pretty clearly on the 81-minute chart right here, or as we looked at the 27-minute chart. No questions? All right, the last marker we're going to look at this morning is natural gas. And we'll start here at the 4-hour or 243-minute chart. So you can see I have the zones marked out. The market is just cracking the middle of that zone, or that between the zones, excuse me, the middle between the two zones. I'll spit it out. So look at the momentum is about to go bearish on this time frame as well, right through here. And this is clearly the energy is to the downside. So when I look at this, because we have this big sell-off, we see the indicators kind of pushing that way as well. I can come in here and I'm just kind of project out that it's likely the market kind of fills in this area here. We'll change, I'm going to change the color here. And test the top of that support region. Now, gosh, we're almost there now. So the support reason, I'm sorry, I said that we're almost there. We're almost to the top of the ellipse. The top of the support region is, of course, the green level there. So that's still a pretty good decline if that's going to take place here. But let's take a quick look here at the energy in the market. And all the energy to the downside. So I would not be fighting this by trying to look to go long at this point. So how do you get on board a market like this that's already seeing some good selling coming in? I come down here to this chart. This would be my 3-minute chart. And I can just, one good way to do it is to simply measure this move using the Fibonacci tool. Now, of course, this may have to be adjusted. It just depends on how much further lower the market moves before any sort of bounce. But from there, I just look at a zone, and it's basically the zone between the 38250, 618 retracements of the Fibonacci tool, and look for the market to perhaps move up into that range. That's a pretty solid retrace. Now, it may not reach out to that level, excuse me. It may only come back here to this, or even this blue line of resistance that I have in place. But when you have a pretty straight decline there, that's a good way to do it. I did not use this peak, and I'll show you why. It did, well, maybe, actually that would have been an okay peak to use right there. I'm looking for markets that retrace at least 50%, and I tried to eyeball it there. It looks like I was off. So that would have actually been okay. So we can adjust this. And it would change that just a little bit here. Well, let's redraw it. We're going to grab it from there to there. And so kind of this zone right here. And so then I will watch the cycle study to come up and cycle out. It's called my turning point indicator. So thus price would have to do something like so and hook over and look to get short if that's the setup I was willing to take. So with all the energy to the downside, that's what I would be looking for here in October natural gas. All right. That's it as far as markets today. If you want to find out more about our course that we put together, you can check it out at gbebinary.com. We have a website. You can call and talk to somebody if you want to do that at our office. We are real people in our office, and here's the information for that. Happy to help out any way we can. Again, gbebinary.com, or you can email us or give us a holler. We are on the West Coast, so folks are in the office from 8:30 a.m. to 5 p.m. Pacific time. Basically, any day the markets are open. I appreciate you joining me. Have a great holiday. Be safe, and we'll see you next time. Take care, everyone.